What's up, guys? Welcome to Reseller's Life. This is part 3 of Reseller Finance with Mark Two, a certified CPA. Mark, how's it going? Where are you from? What do you do?
It's going well. I'm in Utah. I am a CPA who specializes in resellers, or I specialize in taxes for resellers and helping them with their tax needs. And I have a small reselling business of my own.
Awesome. In this episode, we're going to go over the top 5 tax myths for resellers. And this episode, like this whole series, is sponsored by Mark's tax course. There's an affiliate link in the description below. If you guys are watching this in January 2020, there's an aggressive deal going on right now for the launch. After that, if you're watching it after January, you can use code Daily Refinement in the affiliate link below to get a discount. But let's get straight into it. Number 1, if you don't exceed $20,000 in sales, you do not need to report your income. This is a pretty common thing going around.
Yeah, I'd say this is the biggest misconception out there. And it comes from the fact that payment processors like PayPal or Amazon, they don't send you a 1099 unless you exceed $20,000 in sales and 200 transactions. So a lot of people think that, if I don't receive a 1099, then I don't have to report any of this income. But that's not true. It's you do have to report it, but the difference is the IRS won't know about it because it wasn't reported to them. So you can probably fly under the radar for a while. It's not a strategy I would recommend. Just know that for any sales that you make, it's generally going to be reportable and taxable.
Awesome. Yeah. So, I mean, essentially, you're responsible for even $1 in profit. But most people just don't bother. But again, you want to know what's going on so that you can grow this to any size. Eventually, if you are doing any type of volume, you're going to have to report your taxes. Number 2, this is also very commonly talked about, which is your home office deduction is an audit trigger.
Yeah, and this is one I hear a lot too. Someone will tell me, well, I'll ask them for some information. They'll say, well, I don't think I want to take the office deduction because I don't want to get audited. And I just, I'm just sitting there thinking, you have this office space that you're using regularly and exclusively for work, and you have all this inventory, and you could probably get up to several dollars worth of a deduction. But sometimes they don't do it because their fear is holding them back. But you know, first of all, some people question if the home office deduction has ever been an audit trigger. But if that ever were true, it's no longer true because so many people have home offices these days. It's just the normal. It's the norm, and there has been clarifying legislation since 30 years ago or whatever. So it's not the trigger that it used to be. So I would definitely take advantage of it.
Plus, I'm not really like I don't lose any sleep over this because my phone is chinging. There's customer service I'm answering. Like you're constantly turned on to your online business, especially as a reseller. It's not like you're actually taking a break anyway. So it's true. You are using your space exclusively for it. Sometimes it's annoying to your family because it's taken over so much of your situation. So make sure to take advantage of this. It's not an audit trigger. That's false. Number 3, if you sell as a hobby, you don't have to pay any taxes. I love this one.
Yeah. So this one is unfortunately not true. So if you sell, it's actually worse than being a business. So if you have a hobby, the IRS that if you have a hobby that you generate income from, the IRS expects you to report that income, and they're going to tax it. But at the same time, you're not allowed to take any deductions. So if you incur any expenses with that hobby, you can't deduct those. But if you are a business, then you can. So it's actually going to reduce your tax bill if you treat your activity as a business rather than a hobby.
Number 4, if you make less than $400, you don't have to pay taxes. I've never heard this one.
Yeah, so this one comes from the fact that if you have, let's say you're reselling and your profit is less than $400, you're not going to owe any self-employment tax on that $400. But if you have $401, then all of a sudden that's going to trigger the self-employment tax.
Hmm.
So you won't have to pay self-employment tax if you're less than that amount, but you still have to pay regular income tax. because remember, your reselling profits are subject to both self-employment tax and regular income tax.
I've never heard that one before. Do you know where the origin?
It just comes from people's partial knowledge of that rule that
Hmm.
that you don't have to pay. Well, if you make less than $400 of profit, that you don't have to pay self-employment tax, and they just hear, oh, I don't have to pay any tax.
Oh, I got you. So number five, this one is silly, but I hear this all the time. I even saw a company raffle where the person didn't accept a television because they're like, I don't want to move, I don't want to pay the extra taxes on it. So number five, the myth is it's better to make less money to avoid paying more taxes.
Yeah, I mean this is one that I don't know, like taxes. It's just you kind of have to change your mindset. Like instead of thinking, oh, all these taxes I have to pay, like change your mind and think, I must be making a lot of money to have to pay all these taxes. Like, would you rather want it the other way around? Would you rather want to be making almost no money but also paying no taxes? So this is one that a lot of growing businesses have to shift their mindsets about. Yeah. So
I
I don't
have
know.
one of the business people I look up to has writes a quarterly tax check for 6 figures,
Mm.
and I'm like, that person is not happy to pay that, but they're making a lot of money. So people who pay a lot of taxes are not necessarily in a bad situation. Also, if you ever want to buy a house or anything, you need some income, or they're not going to approve you for any type of loan or line of credit. You need to show that you're making some money. You need to pay some tax. Yeah, that's important to recognize that. So, guys, this concludes the top five reseller tax myths. Hope you enjoyed that information. Mark, where's the best place for people to reach you?
You can contact me through my website, notyourdadscpa.com. You follow me on Instagram at notyourdadscpa, or come join my Facebook group, Accounting for Online Sellers, and we'll help you out.
Awesome, guys. And just a reminder, this episode and this whole series, if you haven't watched part one and two, go back and check those out. They'll also be linked below. And it's all sponsored by Mark's Reseller Tax course. There's a link in the description below. It's a no-brainer for people who are serious about building an online company. If you're watching this in January 2020, there's an awesome deal going on right now. And after that, you can use code Daily Refinement for a discount on the course. But I appreciate you guys' time. And until next time, make progress daily.